Alright folks, hope you've had a good weekend and here's to another YouTube video. Let's keep this going. So I just want to go over what I'm thinking for a couple of pairs this week and also go over a trade that I took today. So what I'll go over first is the trade that I took today actually. I was going to do the pairs, but I think that the trade breakdown to start with is easier, better. It's here now. So the trade was Euro New Zealand short, and the main thought process, the main kind of expectation of the trade was, first of all, down to the bodies of the current low of the day. Second was the low of Friday. That was the main kind of thought process. I was selling high on the 4 hour. I sold during the 6 to 10 candle whenever price was at the highs of the last 4 hour, which then gave me a better. It gave me more. What's the word? A better kind of probability. That's the word. That price was going to turn around, even although the last 1 hour at the time before I entered was a strong bullish candle. Because of the areas, because of the structure, because of everything that I saw, and the fact that we were back up at the highs of the 226 4 hour candle, and we'd taken out the highs of that 1 hour, and then as you see, we see a 5 minute structure break, which then I'm like, well, a 5 minute structure break at the highs of the last 4 hour in a downtrend after a strong impulse in the Asia session. A 5 minute structure within 1 hour candle is actually quite significant. Like, there's only 12 5 minute candles, so to make structure, that's at least a few candles. So then if you're seeing a break and then a retest of that structure, that then makes sense from a sell high area on the higher time frame, structure wise, momentum, etc., then to me it made sense to take the trade. So let's go over it. Now, I didn't really, to be honest, I didn't really look at the weekly today after, like, before the trade. It was a sideways bearish week, but still overall in a downtrend. We're actually in a break and retest area on the 4 hour. On Friday, sideways bearish, but it wasn't really too much. I was just making sure that I wasn't selling too low of the previous day, being Friday. So I felt as if we still had a decent amount of room to go to the lows of Friday. So then, therefore, I felt as if the trade was worth it. Going into the 4 hour now, the 4 hour at the time was bearish candle 226, and at the time that I was looking to enter, we were up at the highs in the 6 to 10 candle. We were up at the highs of the 226, which was bearish. It's the trend on the 1 hour was bearish. It had a 1 hour break and retest area as well from Friday. We had a strong impulse through it, sideways action, creating new resistance up at the highs at these wicks, this wick area, and then went into it and then saw rejection on the lower time frame. So I'll just hide that just now, the list. So yeah, that was my thoughts. I felt that we had room to go to the lows for my trade to make the trade worthwhile. I knew that it wasn't going to be something that I was going to be holding for long, because the higher time frames, we were going into a 4 hour support area, last low of last week. There was no real momentum in Friday's candle. So kind of the main target was, again, the lows, if possible, the bodies of the lows, and then the wick of the lows. As always, it's nothing. I don't overcomplicate things. As I say in most videos, I just keep it the same process on the higher time frames, especially day in, day out, candle by candle. So now on to the 1 hour. So the 1 hour was pretty self-explanatory. Yes, the last 1 hour at the time was a pretty strong bullish candle. So I can understand why people would wait for a sideways candle, bearish candle, something like this to show the momentum has dropped. But the thing is, I felt because my stop loss again was going to be so well protected due to the fact that we were at the highs of the last 4 hour candle, at the highs of the current 4 hour candle. I had that next higher time frame up stop loss protection, which changes the game for me. It just allows me to be a bit more aggressive because the stop loss is safer. And the fact that we had taken out the highs of the previous 1 hour in a break and retest area, in after a strong impulse down, in a sell high area on the lower time frames, at the sell high area of the last 1 hour as well, due to the fact that we went above the highs. So yeah, this was the 8 till 8:15 candle. This blue zone here is basically a kind of a resistance zone that was closed beyond slightly, but then broken and closed back below. So I was using this as a breakout break back in, which was on the 15-minute, just below the 1 hour break and retest area. Of course, this is an area on the 15-minute as well, but the way that I work, the way that I do it is just the most immediate area. So it's not the most immediate area on the 15-minute. So then going down onto the 5-minute. Onto the 5-minute, you can see here that this was the break. I still have my zones from this morning marked out. This was the support that created the high. This was the start of the new 1 hour candle, took out the highs of the last 1 hour that closed bullish. Then we had a strong impulse down, closed beyond the kind of latest support. So then, therefore, I was like, well, what I want is a pullback and then look to enter. So we had this kind of breakout, break back in area as well. If I just mark it out, like a kind of 5-minute head and shoulders, lower high, whatever you want to call it. It was this area as well, within a 15-minute breakout, break back in area, after a break of structure on the 5-minute, in a 1 hour break and retest area, at the highs of the last 4 hour bearish candle, at the highs of the current 4 hour candle. There's plenty to say to me. It makes sense to take short. So I actually entered. I did have drawdown. That's why I put my stop loss where I do, rather than putting it just above the candle that I enter, because I want that higher time frame protection, especially whenever the last 1 hour is bullish. I want that protection from the 1 hour, from the 4 hour. I mean, if I go to the 4 hour right now and I just go into it, you can see that my stop loss was protected by the highs of the 4 hour at the time. The highs of the 4 hour at the time, my stop loss was above it and just below the previous 4 hour, but it was what? The high of that is 1.6876. And then you can see here that it was 1.6873. So about 3 pips of a difference. Now let's go back. And I didn't hold all this trade for the whole length of the time as well. That's not the way that I work. I take profit as I go. Then it's just about whether my kind of longer term targets are hit. And this is the accuracy of these levels. Look at where we were in comparison to Friday. We were right down at the lows. Where did it reverse from and have a deeper pullback? Down at the lows after making new lows of the day. That to me is a classic. People will enter here thinking that it's going to continue on down, and it probably will continue on down tomorrow because it looks as though it's going to be a fairly hefty bearish daily candle close. Therefore, it's going to be more than likely a decent short trade tomorrow as well. But look at how from 11:30 to 4 o'clock, it just basically went up. There was a few times that it did go, that it did try and turn around, but at the end of the day, the main pushes were bullish until this final drop that looks as though it's going to make the daily candle close bearish. So if I look at the 1 minute, which is what I entered on, so the 1 minute, I basically entered in here. I entered in this area, 1.6861. That's where I entered. I've seen this kind of rejection, multiple wicks, and I've entered here. Now it does go and make a new low. If I just bring out the stochastic, it does go and make a new low. But to me, I was quite happy to let it go and do its thing, pull back, and then look to see if we can get another push. Because if I got stopped out and something happened that then made me think that it could go short again, then I would have looked to re-enter. I don't really have an issue with that. But what I did was I was like, well, let's see where the stochastic becomes oversold again, overbought again, sorry, to then see if it lines up with price action that it could go short again. So we did have this 1 minute break and retest area here, the support here that could turn resistance, which it did. It was rejected. So I went in about 5-6 pips of drawdown. So then obviously my alert went off that, right, okay, this is where price should really turn around. If it doesn't turn around from here, then I'm probably going to take a loss because the momentum's too strong, because it's in an area that the stochastic and price action says that it should turn around if the higher time frame momentum is going to kick in. So then it then is able to close as a 1 hour candle that goes in the direction of my bias. So we had this area here. It showed rejection. I liked this strong bearish impulse down, and the nice thing was that it got back below this red area, but it didn't hit the stochastic oversold, so it wasn't in an area that could push up again. So we came back into the retest area, basically back to my entry point, and then we got this nice flush, nice push for a good 10 minutes or so, breaking down the lows. And then that's whenever I started to go, right, okay, well, I better take some of my initial profit off in case we do come back to my entry point, because what I quite often do now is that whenever I'm taking my first position off, like first part of my trade, I'll leave my stop loss basically open. So I left it open. There is sometimes that I would put it below, like above the most recent high. If I've been in a trade that was in drawdown, then I would put it above that high rather than keeping it fully open. But for this trade, I kept it fully open. We then had this push. It was coming into the 1 hour candle close. I thought, right, well, it's the last 1 hour of the 4 hour. We're down making new lows. We're at a stochastic oversold. Let's take some profit here. So I took some profit there, and yeah, it just so happened to be that price continued on. We had the 9 o'clock candle closed, 9 till 10 kind of went sideways, and then I took some more profit at the new low of the day. So we had this area here from 4 o'clock in the morning. We got there and I took some profit. I basically take some profit more often than not at that number. Like, I'm not really going to wait to see how price reacts. It's quite mechanical in the way that, right, okay, well, if we've made a new low of the day, I expect a pullback. How far of a pullback, how deep of a pullback, I don't know at that moment in time until structure tells me more, but I'm happy to take some profit. So took some profit whenever price got to the new lows, and then whenever I saw that it was going sideways, coming into the 4 hour support, coming into the close of the 4 hour candle, after we'd had a decent kind of pullback and move of the 4 hour, I was like, well, we've tried once, we tried twice, we tried 3 times to make a new low of the day, and I basically took, again, most of my profit off of the trade that was left are around the lows of this support area here, 1.6836. So then I left basically a minuscule part of my trade at break even, and I had an alert at this area here, which was a 5-minute structure, and we went above there. So I basically just closed the rest of the trade because I was like, well, a deeper pullback more than likely is incoming now, which is what occurred. So yeah, that's Euro New Zealand. It was nothing fancy. As you can see, I was kind of expecting strong bearish candle. I was right, well, this is such a strong candle. I need another strong candle or another bearish decent body candle after it to show the momentum's continuing, considering we'd already had a decent move. But the fact that we started to just have a new low of the day and then buyers came in, the wicks happened, I was just like, well, if we make a new low and we're not closing beyond, then the likelihood is at some point buyers are going to come back in and probably take me back to where my entry point was, and it turns out to be beyond before sellers try to come in again. And as I say, it looks as though we're going to get a pretty bearish daily candle. So yeah, that's it. It's something that I'm not really someone that says this is the exact amount of time that I'm going to be in a trade, but usually this kind of trade that is a pullback into a break and retest area, continuation down to the lows of the current day, and then the previous day is usually 1 to 3 hours trade unless it really runs. But as I said, the higher time frame at the time didn't really suggest that was going to be the case. So now going into analysis for the rest of the week, I think that Euro New Zealand could be another push to the downside. Strong bearish candle should be closing with another 2 hours to go. It just depends what happens with this support. I wouldn't really be wanting to sell into this support now. It was different whenever I was up at here at the highs of the last 4 hour candle range, selling into it because I was still selling high. But now, obviously, volume, etc., I'm not going to be interested anyway. But for just education's sake, now you can see we're at the lows of the last closed 4 hour candle. So the difference between being up in here or down in here is you're selling low compared to selling high, even though you're roughly in the same kind of area. So yeah, that's Euro New Zealand. I wouldn't be surprised if price continues on down. Euro Aussie is very similar to Euro New Zealand, more often than not. If I look now, this is my break and retest area. It was reacted from same time that I entered Euro New Zealand. It's came up, basically made a double top in a downtrend and reacted again. And to be honest, it's actually been a cleaner move than Euro New Zealand. So it looks good for shorts again tomorrow as well. But Friday's candle was a lot more bullish. And we're coming into support, but we are probably going to have a 4 hour break and retest. If this 4 hour closes beyond this support here, then that will be a break and retest area that could be respected. Euro dollar was another that I had shorts today as my kind of main bias, which it absolutely happened. We had a break and retest as well, came to the highs of the 10 till 2 p.m. candle. What time was that at? 2 till 3. There was a nice bearish sales candle from a sell high area on the last 4 hour candles range, and medium term, immediate term on the lower time frames, sell high. I expect shorts, but the US dollar isn't really as strong as the Aussie and New Zealand, so that's why I personally prefer Euro New Zealand, even though Euro dollar was a very nice move. Pound this morning was stronger than the euro, so I was put off trading the pound dollar, but I do have an area that break and retest did occur. Was on the 1 hour / 15 minute. As you can see here, we had a nice flush down, and then price came back into it, failed, and then made a double top and had the push. Now, if you'd have got in here, say you saw this move down and you saw this 15-minute bearish candle, you saw, let's see, there's probably a 5-minute structure break. Let's see. This is some good kind of idea. Yeah, so there is a 5-minute structure break. Now, if you got in here, your trade's not wrong. It's just so happens that, look, it comes to the origin of the pullback. This is the origin of the pullback, comes to there and then goes a bit higher again. It happens. And that's usually to do with like how strong or how weak a currency is. For example, pound was gaining against most pairs whenever I woke up this morning for London. So therefore, I was like, well, if it is going to pull back, it's probably going to be stronger than, for example, euro pairs because they were weaker. So as you can see, we have where's the pen? Oh, still got it. The brush. You can see here, that area here. If I just make it a bit bigger, you can see that we did have a structure break. Support from 5 past 11, support, comes back, retests 20, 25 past 11, and then it comes down into here. Now that is 15 down into 02, 0, like between 10 and 15 pips. And your stop loss 15, stop loss above the highs 5-6 pips, maybe a bit 1 pip more or so with spread. So that would have been a 1 to 2 type trade that would have been perfectly valid, even although you wouldn't have taken all your profit here, but you would have taken a decent amount and then the rest probably would have been stopped at break even. But that, you're not wrong. You're not wrong doing that. It's not a bad thing to take trades that price says for it to drop, but it's just then the strength and weakness might be slightly against you rather than just purely technicals. You want to see, right, okay, well, is pound one of the weakest? Is dollar one of the strongest? And for me this morning, that wasn't the case. That's why I left it out. I was happier with Euro New Zealand. But pound dollar is a weird one. It's in a very long sideways range market on the higher time frames, daily, 4 hour. It's very sideways. To me, this says that something big's going to happen. In what direction? Who knows? People are always going to say they know what's going to happen, but I mean, it is really, really slowing down, topping out. So if we do get a structure break, the momentum today is bearish, as you can see. It's quite clearly bearish. So if we can see this structure break in here, the last low of last week, then it would make sense for further shorts. We have a break and retest area from overnight as well. If I just make it slightly bigger, we have this area here that could be retested. It basically was in the last 4 hours, 226. So yeah, I would still prefer shorts, but it's basically ranging. You're better going for something else. If you think that pound's going to be weak, then look at something that's going to be strong rather than pound dollar until the market tells you otherwise. There's no need to sit in trade. So we spoke about Euro New Zealand. Dollar CAD. Dollar CAD is kind of undecided for itself. Friday, strong bearish day, but we had a decent push the rest of the week. We are at the resistance that wasn't quite closed beyond yet, so sellers could come in, but again, it really depends on whether the dollar wants to be strong or weak. We do have a break and retest area that has been retested, so this could be an area that is a breakout, break back in type scenario, because it was a break and retest. It was a break and retest, but it looks as though As of right now, the momentum's not really that strong. This is probably going to close bearish, so therefore it could become what I class as a fake out, break back in, however you want to call it. Original resistance pushes above, and then we come back down into it. And if this goes short, you would expect pound dollar to go long. But right now, it looks as though it wants to go long, but that's just right now. And coming into Asia session, the daily candle close, it could easily just be this is the high of the day for tomorrow, and 4 hour resistance comes in with this 4 hour bearish candle, and then we start to drop. That could be something that occurs. So dollar CAD needs more time. Euro yen and pound yen I'll look at as well. Euro yen's quite a mess. It's quite impulsive, and then just no real push, and then slowing down again. To me, it's coming into a 4 hour break and retest area. If you start to see some 4 hour bullish candle, then it would make sense to look for longs if the momentum kicks in. But then euro dollar, euro yen usually go in the same direction, so you would expect euro dollar to be going long. Therefore, if euro dollar is going long, you would expect pound dollar to go long. There's quite a lot of connections with different pairs most of the time, not every single day, every single minute, but just logically, euro and pound usually go in the same direction most of the time. That's just correlation. And pound yen, as I say, pound has been stronger than the euro today, so it makes sense that the pound yen went higher than what euro yen did. In general, yeah, I would still prefer longs until I saw a structure break on the 4 hour. We've created new support in the last 4 hour candle. So, yeah, I would be saying that we could be going higher. The candle that is closing just now is quite bearish, but if we're around the lows of today, tomorrow London session, then that would mean you're buying low. You see the momentum coming in. You can target the highs of the day at the time. So whatever happens in Asia session, and then obviously the highs of today, which is up at 1.44, basically a nice round number. So yeah, that's my thoughts for this week going forward. I expect Euro Aussie, Euro New Zealand to continue short, and therefore Euro dollar, pound dollar again makes sense to me to go short. Dollar CAD, if I expect Euro and pound dollar to go short, I expect that to go long, but technically I'm still kind of against going long just now. I would want more sign of buyers coming in, because it's been in such a decline on the higher time frames that if the buyers really do step in, it's probably going to be for a decent amount of time. So there's no rush to get involved. So yeah, any other questions, suggestions for videos, or want to book in on a call with me, etc., then give me a shout. And yeah, hopefully your trading goes well this week, and just stick to your processes. It'll work out if you just are doing the right thing daily and keeping on top of things. I'm going to be doing a video on daily and weekly processes as well. Best pairs to trade in London, and yeah, how important 4 hour zones are as well. There's a few different subjects that I've got here for videos for this week, so tune in whenever they come up.